because I want to just talk about AI, because that's what everybody wants to talk about. That's all that anybody's talked about since, I don't know, November or December. So the other day, I read a story, and it says, OpenAI, of Chat GPT fame, seeks a valuation of $90 billion for a possible share sale. Now, the valuation was $30 billion back in January. So $30 billion January, $90 billion in September. Is AI a bubble or not?
Well, I've been investing. First, thanks for having me. It's a great event. I've now been investing in technology for 25 years. I've lived through a few bubbles. We like to describe these moments as super cycles, right? The internet, mobile, cloud computing, and now AI. They're the start of these things that are going to be profoundly impactful in our lives. But at those moments, you can also have overhype and overprice. And so as an investor or a builder, you have to get comfortable with two simultaneous but competing truths. On the one hand, we probably overestimate in the very short term, which leads to price inflation, the impact that these things will have. But much like the internet in 98 and 99, where there was overpricing in the short run, we dramatically underestimated the impact it was going to have over the preceding decade. And so I've said, in fact, I know ChatGPT brought this to the public consciousness. My first AI investment was in 2005, backing the head of AI out of the University of Washington. So this has been going on for a long time. In 2018, the Business Roundtable, I remember I addressed, Satya was running that event in San Francisco, and the event was on the impact of AI on industry. And at that event in 2018, I said, and this was a year after the transformer model, that the impact would be greater than the internet itself. And so we should double click on what that actually means. But I would say, no, we have overinflation in some assets, right? OpenAI at $90 billion may be ahead of itself, just like we saw stocks get ahead of themselves in 2021. But it doesn't mean that AI itself is not going to be profound.
Okay, fair. The problem or the difficulty, I guess, for investors is separating the near-term winners from the longer-term beneficiaries. And it seems to me that right now everybody's kind of lumped in the same boat. Yeah. Winner, 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 even though the so-called picks and shovels companies that we talk about, the NVIDIAs of the world, that you're a big investor in that company, and I know how much you like it. It's easy to see the monetizable roadmap for that. Some of the other winners that are up 50 to 60 to 70% this year seem to me to be more hope and more hype. Is that fair?
Well, let's just start with the providers of picks and shovels, right? So somebody like NVIDIA, that is up a lot this year. But if we look at the start of the year, the consensus forecast for NVIDIA was that data center growth would be negative 6% this year, right? We all have a hard time rolling the clock back to January 1st of this year. But we all thought, the consensus view, the Mike Wilson view, was that there was going to be a hard landing in Q1 or Q2. And that led to really negative forecasts, which is why the stock was trading just over $100 a share. So today at $400 a share, you say to yourself, well, this must be wildly overvalued. But the fact of the matter is, on consensus forecasts for next year, it's trading just over $20 or 20 times earnings. It's trading at a lower multiple than many cyclicals in the public market.